Level 1. Self-managed wealth. You manage your own money. Your financial life exists across a few accounts: a checking account, a savings account, and a brokerage account where you invest in stocks or ETFs. You make every decision yourself, from what to buy to when to sell. At this level, everything is under your control. You choose your investments based on what you know or what you are learning. You may follow basic strategies like long-term investing or diversification, but most of your approach is built through personal research and experience. There is no coordination between taxes, investments, and long-term planning. Each decision is made individually without a larger system connecting everything together. You are responsible for understanding risk, managing your portfolio, and making adjustments when needed. This gives you flexibility. You can move quickly, change strategies, and learn as you go. There are no layers between you and your money, but there are also limitations. You do not have access to advanced investment opportunities. Your tax strategy is basic. Your decisions are limited by your time, your knowledge, and the information available to you. At this level, your focus is control. You want to understand what your money is doing and why. Because before wealth becomes complex, it starts here, with full ownership, full responsibility, and no structure beyond what you create yourself. And as your wealth grows, that simplicity begins to change. Level 2. Financial advisor. As your wealth grows, you realize that managing everything on your own has limits. You understand the basics, but you start to see gaps in your strategy, especially when it comes to taxes, long-term planning, and risk management. So you bring in a professional. You hire a financial advisor. At this level, your financial life becomes more structured. Instead of making decisions alone, you now have guidance on how to allocate your assets, plan for retirement, and manage risk across your portfolio. Your advisor helps you build a plan. They recommend a mix of investments based on your goals, time horizon, and risk tolerance. They may suggest a portfolio built around equities, bonds, and diversified funds, along with strategies to reduce unnecessary taxes. You still make the final decisions, but now those decisions are informed. You move from reacting to the market to following a plan. You begin to think in terms of long-term outcomes instead of short-term movements. This improves consistency. Your portfolio becomes more stable and your approach becomes more disciplined. However, the structure is still relatively simple. Your advisor works with many clients. The strategies are effective but not deeply customized. Most of your financial components are still handled separately. At this level, your focus is optimization. You are no longer trying to figure things out on your own. You are refining what you already have. And as your assets continue to grow, your needs become more complex than a single advisor can manage. Level 3. Wealth management firm. As your assets grow into the multi-million range, your financial life becomes more complex than a single advisor can handle. You begin working with a wealth management firm or private bank that provides a broader set of services. At this level, your portfolio is no longer self-directed. A team manages it. They build and maintain your asset allocation, execute trades, and provide access to a wider range of investment products. This includes mutual funds, structured products, and sometimes private market opportunities that were not available to you before. Your investments are now part of a managed system. You receive reports, performance updates, and recommendations. Decisions are guided by professionals using models, research, and institutional processes. This improves efficiency. Your portfolio is monitored continuously, and adjustments are made based on market conditions and your long-term goals. You also gain access to better tools. Tax optimization improves. Risk management becomes more structured. Your assets are positioned within a broader financial strategy. But there is a trade-off. You have less direct control. Your portfolio is managed within standardized frameworks designed to work across many clients. The strategies are effective, but not fully tailored to your specific situation. At this level, your focus is delegation. You are no longer managing your money day to day. You are trusting a system to manage it for you. And as your wealth continues to grow, that system needs to become more personalized. Level 4. Dedicate a team. As your wealth continues to grow, you reach a point where standard solutions are no longer enough. Your financial situation becomes too complex to be handled within a generic system, and you begin building a small, dedicated team around you. This team typically includes an accountant, a lawyer, and an investment advisor. Each person handles a specific area, but more importantly, they begin to work together. At this level, your finances become coordinated. Your tax strategy is aligned with your investments. Your legal structure is designed to protect your assets. Your financial decisions are no longer made in isolation. Everything starts to connect. You begin using more advanced strategies, entity structures for income, more efficient tax planning, better control over how assets are held and transferred. Decisions are no longer reactive, they are planned. You think ahead, not just in terms of returns, but in terms of efficiency, protection, and long-term positioning. Your role also changes. You are no longer executing decisions. You are directing them. Your team presents options, and you decide based on your goals. At this level, your focus is structure. You are building a system around your wealth instead of managing it piece by piece. Because as your assets grow, complexity increases. And without structure, complexity creates risk. With the right structure, it creates control. And once your wealth reaches a higher level, even this setup begins to evolve into something more institutional. Level 5, multifamily office. As your wealth grows into the tens or hundreds of millions, your needs become more complex than a small personal team can efficiently handle. You move into a multifamily office, a professional organization that manages the financial affairs of several wealthy families under one structure. At this level, your wealth is managed with institutional precision. The firm provides integrated services including investment management, tax planning, estate planning, and reporting. Everything is coordinated within one system, reducing fragmentation and improving efficiency. You gain access to opportunities that were not available before. Private equity deals, direct investments, and exclusive funds are now part of your portfolio. These opportunities are often sourced through relationships and networks that operate at a higher level of capital. Your financial life becomes more organized. You receive consolidated reporting across all assets. Your strategies are executed consistently, and your portfolio is managed with long-term objectives in mind. There is also a cost advantage. Because the office serves multiple families, you benefit from shared resources while still receiving a high level of service. However, there is a trade-off. You are not the only client. Attention is shared, and strategies are designed to fit a range of clients rather than being fully customized to one. At this level, your focus is efficiency. You are operating within a professional system that manages complexity for you. And as your wealth continues to increase, the next step becomes clear. You move from shared infrastructure to building one that exists solely for you. Level 6, single-family office. At this level, your wealth is large enough to justify building a structure dedicated entirely to you. You establish a single-family office, a private organization that manages every aspect of your financial life for one family only. This changes everything. You are no longer sharing resources, attention, or strategy with other clients. Every decision, every structure, and every investment is designed specifically for your objectives. Your team expands. Investment professionals, tax specialists, legal advisors, and operations staff all work within the same organization. They coordinate daily, ensuring that every part of your wealth is aligned. Your investments become more direct. You are no longer only allocating capital into funds. You participate in private deals, co-investments, and sometimes acquire controlling stakes in businesses. You decide where capital goes and how it is deployed. Tax and legal strategies become more advanced. You use trusts, entities, and jurisdictional planning to structure your wealth efficiently. Decisions are made with long-term impact in mind, not just annual performance. Your role shifts significantly. You are no longer managing or even reviewing every detail. You are directing strategy. Your family office executes based on your vision, your risk tolerance, and your long-term goals. At this level, your focus is control and customization. Your wealth is no longer placed into a system. You have built your own system. And as your assets expand across borders, that system begins to operate on a global scale. Level 7, Global Family Office. As your wealth expands across countries and asset classes, your family office evolves into a global operation. Your capital is no longer concentrated in one market or one jurisdiction. It is distributed across regions, currencies, and legal systems. At this level, complexity increases significantly. You are managing assets in multiple countries, each with its own tax laws, regulations, and risks. Your team must understand how to operate across these systems while keeping your overall structure efficient and compliant. Your investments become international. You allocate capital into global equities, private businesses, infrastructure projects, and real estate across different regions. Diversification is no longer just about asset classes. It is about geography. Currency exposure becomes a factor. Your returns are influenced not only by performance, but also by exchange rates and macroeconomic conditions. Your team actively manages this risk. Legal and tax planning become more sophisticated. Structures are designed to protect assets, reduce exposure, and ensure smooth movement of capital across borders. Trusts, holding companies, and international entities are coordinated as part of a larger system. Your focus shifts from growth to protection. Preserving wealth across different environments becomes a priority. Political risk, regulatory changes, and economic cycles all factor into your decisions. At this level, your family office is no longer just managing wealth, it is managing global exposure. And as your time horizon extends beyond your own lifetime, the purpose of the system begins to change again, from protection to continuity. Level 8, Generational Wealth System. At this level, your focus moves beyond your own lifetime. Your wealth is no longer managed only for growth or protection. It is structured to last across generations. The family office becomes more than a team, it becomes a system. You establish long-term structures such as trusts, foundations, and holding companies designed to preserve and transfer wealth efficiently. These structures define how assets are owned, how income is distributed, and how decisions are made over time. Governance becomes essential. You create rules for how the family interacts with the wealth. This may include investment guidelines, decision-making processes, and roles for future generations. The goal is to maintain stability even as leadership changes. Education becomes part of the system. Future generations are prepared to understand and manage the wealth they will inherit. Without this, even well-structured assets can be mismanaged over time. Your capital is allocated with a long horizon. Decisions are made not just for years, but for decades. Preservation, sustainability, and controlled growth take priority over short-term gains. At this level, wealth is no longer personal. It is institutional. It operates independently of any single individual, supported by structures that ensure continuity. The goal is no longer to build wealth. That has already been achieved. The goal is to maintain it, protect it, and transfer it in a way that allows it to endure. Because at this level, success is measured not by how much wealth you create, but by how long it lasts.